Hey everyone, how's it going? Welcome back to another quick educational video. Today I want to focus on parallel channels. Okay, I made a video before on ascending and descending channel. I still get a lot of questions asking about the descending and ascending channel, in addition about horizontal channel as well. So I thought I'd make a video on breaking down all of them once again more in depth. So I'm going to use real life examples of the charts, and I'll also kind of go over my chart drawing here to give you guys a breakdown of them and hopefully to pass on the knowledge and experience I have in them. So any question, comments, let me know below, and let's get started with parallel channels. So just like any other correction that I always talk about, that we need to see a period consolidation. Right? A period consolidation can be any one of these where there is at least few swing highs and few swing lows. You can see that the minimum that we need is two swing highs and lows, but obviously the more the better. Okay, the more of these, the better of the correction that can go, the stronger the next impulsive phrase that will happen. You need to understand that when we see a parallel channel, when we see whether they're ascending, horizontal, or descending, they're telling you a story that the price is consolidating. They're not moving up and down too much. And when the correction is over, we're likely to see that strong impulsive move to the desired direction. Now, there's different ways of trading them, different way of people analyzing them or using them effectively. I'm here to just kind of give you guys what it works for me personally, how it works in my trading. So certainly, there's different ways of using the channel. There's people who want to trade from the top, sell it to the bottom, or trade it from the bottom, selling to the top. And I think that's absolutely um, valid as long as that fits in their trading plan. What I find though, what to make the channel more effective is waiting for the channel to complete correcting. We know channels are a correction, so when a correction phase finishes, there's a very strong probability that we're going to get the next impulsive phase of the market. And if we enter just about the price that's going to start the next impulsive phase, we actually can produce a better result, a better risk reward, and a higher probability trades. Okay, so let's take a look at an example. I mentioned that there are three types of channels that are usually going to form in the market. Ascending channel is something that we know that's going to be a reversal. So it can be a move just kind of going up and up and up, and it slowly falls into a ascending channel. So period consolidation, it's moving up and down, but it's in the ascending kind of formation. And once the ascending channel completes, we see a really strong impulsive move to the downside. Whereas descending channel is pretty much an inverse of that. We see a move potentially pushes down, and then we see a period consolidation moving in a descending kind of formation. And once the descending channel completes, we are usually going to see a strong, very strong impulsive move. Now, the horizontal channel is something I didn't talk about from the last video. And horizontal are a little bit more advanced. They're more neutral, meaning that the correction itself is not ascending nor descending. It's kind of more moving on the sideways kind of formation. But it's the same kind of concept, is that when the channel completes, we're going to get a strong impulsive phase. But horizontal channels are more neutral, meaning that they can be both reversal and continuation. What do I mean by that? Well, let's say you have a move coming down and then start forming into this correctional horizontal channel. There's a good probability that it can continue to the downside, right? So continuation breaking out of that horizontal channel and then continuation to the downside. There's also a probability where price will correct in the horizontal channel and then reverse up and continue upside. That's also a probability as well. So make sure you understand that the horizontal channels are a little bit more advanced, just like the expanding structures I made in the past. We're a little bit more advanced where like it needs a little bit more confirmation. So let's take a look at a few real life market examples. I'm going to go over a bunch of different examples talking about these three types of channels, and I'll break down kind of the possible entries that you can actually capitalize on. Again, these possible entries is another video that I've made in the past about the entries that you can take potentially in an impulsive phase in the market. So feel free to tune into that video. I'll put the description or link below. So let's take a look at a few examples here. I'm just going to go through on a higher time frame. And again, you have to understand these type of correction, these type of channels, they appear anywhere in the market. It's kind of how we're going to capitalize on it effectively. So if we look at example here on Aussie Yen, If we look closely here, there is a channel formation here. You can classify this as more of a horizontal channel. They're not as ascending, it's not as steep as you can imagine. So I would more classify this as ascending channel. So this is a channel followed by an impulsive move to the downside. It's correcting here, but it's giving us a good sign that there is potential continuation. So how do we actually capitalize on this? Again, looking for a potential completion of the overall channel here. So impulsive move to the downside followed by a kind of a horizontal kind of continuation channel correction. And again, when the correction completes, you can either enter from the top, or you can either enter from the breakout of the channel, or you can look for some sort of lower time frame continuation to the downside. So another example here, this to me is a little bit more ascending now. You can see there's a little bit more in depth to the upside move. It's a little bit more steep, but the same idea here is that the ascending channel is a reversal. So while the move is going up, it's actually signaling a potential reversal down to the downside. So again, different type of entries. We can enter as a reversal order from the top. So as long as you see a potential bearish price action from the top of the overall channel, you can potentially looking for entry like so. Or you can look for a breakout entry where the price actually completes this overall channel, and you can set a stop order here and then put the stop loss above the high. And the third type of entry, which I always utilize, is a correction after breakout. So once we see an impulsive move breaking out of this channel, there is a continuation correction here, and that's going to help you to potentially get in on the next impulsive move. So making this impulse correction and impulse down on the lower time frame. So let's look at a bunch of more examples. I'm going to go a little bit fast here, but I want to make sure to talk about all sorts of different channel examples in different market and different time frame. So to me, this is more as a descending channel. Now, remember when we go back to the previous example on gold, on the example that I point out here, is that descending channel, ascending channel, they don't necessarily have to start from the top going down like this. They can start from the bottom and then still descending in this kind of scenario, and then still impulsively push the upside. And same thing as ascending channel. They don't necessarily have to start from the bottom and then ascending itself up before it reverse. It can actually drop down first and then form ascending channel and then continue to the downside. The reversal part is when the price is moving up correctively, preparing to reverse down. Same thing as descending channel, the price is pushing down correctively to reverse back up. So if we look at the example here on CAD Yen, see that instead of a descending channel, let's say coming down from here and then forming into a descending channel, this is overall more as a bullish move to the upside and then falls into a descending channel correction. And you can see that this is clearly a channel correction that's correcting. We finally see the price reach to a double bottom here, and pretty much we had a impulse down, reversal impulse correction, and we break out of that descending channel. So again, while the price is moving down correctively, the descending channel is a reversal to push the price up when the correction completes. Let's take a look at another example here. I want to talk about Kiwi Yen here. So you can see again, this is a large descending channel that you can see. It's descending channel, it's moving the price correctively down, but eventually it leads to a bullish reversal while the price is moving down. And within this descending channel on a higher time frame, there's actually another horizontal channel right at the bottom of this overall structure here. So while the descending channel is moving down, you can see that there is an ascending channel here and then push down the price. So pretty much there is an entry here from reversal, there is a breakout entry from the ascending channel completes, and then there is a correction after breakout. So impulse correction, impulse down. And as we see here, when price breaks down very hard, or price breaks down very sharp, instead of forming any type of continuation, we start forming into this horizontal type of channel. So horizontal, we know it's more even, it's not ascending nor descending, it's very parallel, um, it's moving kind of in a sideways consolidation. But remember, we talk about horizontal channel can either be a continuation correction to go down lower, or it can be a reversal correction to reverse back the price. And in this case, it becomes a reversal. And the confirmation to me is while the price is correcting here, it's hard to determine is it going to continue downwards or is it going to reverse upwards? But the confirmation to me here is once this horizontal channel completes correcting, we see an impulse breaking out of that horizontal channel, and there is a lower time frame continuation. This is kind of how I personally is going to distinguish a horizontal channel. Is it going to be a continuation or is it going to be a reversal? And in this case, because it breaks out of that channel and there is lower time frame continuation, that to me is a good sign that it's going to be a reversal type of channel here. Okay, so let's look at a few more other examples here. So if we look at here on Euro Aussie, to me, this is more of a horizontal channel. We have an impulse down to the price, and to me, the channel is relatively moving sideways. It's not moving ascending like, or it's not moving descending like. It's more horizontal. It's moving sideways. And again, because these are horizontal channel, we want to be a little bit more careful. We want a little bit more multi-time frame analysis. We want a little bit more bearish kind of price action to give us confirmation. So we know the impulse is down. We know that there is a horizontal kind of channel. To confirm the bias is kind of looking into the lower time frame, some multi-time frame analysis. I'll put the video down below. So we see that there is almost like an ascending channel while within the horizontal channel. So that's a good sign that the ascending channel is going to be reversal. So while the price is moving up, is likely to have a reversal impulse down. So that's the first sign from the market, and you can see that once price breaks the high here, we pretty much have an impulse down followed by a continuation correction, and we just impulse down again. And you can see that there is also lower time frame continuation while we break out of that horizontal correction. So multi-time frame analysis is super important. We can actually identify a little bit more from the price when we start digging into the lower time frame, when we start seeing that lower time frame impulse, lower time frame continuation. And once this continuation correction form, it gives you a sign that this horizontal correction may be a continuation now, because this impulse down and then what's going on within the horizontal correction give you a little bit more bearish bias to push the down price. And then once we break out, continuation correction, and then we push down the price much lower. Okay, so again, looking at a few more examples here. If we look at pound CAD here, let me just find the example here. So again, horizontal kind of channel, right? We are at the bottom of the structure. So now normally when we see an impulsive move, we're following by continuation correction to go down. But this horizontal channel here is giving us something else. You can see that once the price dropped down here, we start forming into this sideways kind of consolidation. But the key here is we did not break out of that horizontal channel. We did not see continuation correction. Instead, we see a impulse out breaking this horizontal channel, and there is lower time frame continuation here that leads into this next impulse correction and impulse up. And a few more examples. Let's take a look. Dollar CAD. So dollar CAD, we see the strong bearish impulse down, and this is to me more as ascending kind of channel. Now you can see the channel itself is not as horizontal as what we usually see. It's more ascending like kind of structure. So we know that while the price is moving up, it is a reversal structure to eventually push down and reverse the price right back down to its original bearish kind of momentum and price action. And if you look closely here, within this kind of ascending channel, there is a little bit more clue here. There is a head and shoulder pattern. Okay, there is an impulse down followed by a kind of a bearish flag continuation. So again, a few different entries, right? We talk about a potential reversal entry when we see a little bit reversal bearish price action entering at these kind of reversal order. Reversal entry would be maximizing risk reward, but also very risky. Whereas if you enter at the breakout, well, certainly it's going to give you a very wide stop loss, but the safest type of entry as well. Or you can wait for some sort of correction after breakout. If the price breaks out and then if there's lower time frame continuation, that's going to be a correction after breakout, and that also works in this kind of examples. So Let's look at a few different things. Let's look at a different market now. Let's look at S&P 500. And S&P 500, if we know how indices work, they are always going to form these type of ascending channel formation. So if you notice, if you zoom out and if you look at all sorts of indices, whether on S&P, whether on NASDAQ, or even Dow Jones, you're going to see these ascending channel reversals. So we know that when these ascending channels start forming, when it start reversing like these, there's a very good probability that we're going to get that strong reversal price action. So while the price is moving up correctively, there's going to be a very good probability that it's going to reverse once the channel completes. And that's kind of what I talked about in the beginning. There's many ways of trading channel. There's many ways of people taking advantage and benefiting from trading them. But I find that the most effective is when the channel actually completes correcting and we have that strong impulse to the downside. That's going to help you to capitalize on the potential move a little bit more. And looking at a few more examples here, so if we look at gold here, if I zoom into the lower time frame here, so we know that there is a potential kind of a channel, descending channel almost, that after this strong impulse and move to the upside, there is a channel formation here. We know this is a higher time frame correction. If we look closely here on the lower time frame, now there's actually a lot of price action within the higher time frame channel. And the most notice part is when we see that few swing highs and few swing lows, and when we see a potential completion, if you notice, there is descending channel here pushing the price down. We broke this previous low, and there is a strong bullish kind of impulse potentially pushing the price up, and that's going to give you a good sign that this overall higher time frame channel potentially could be completing as we speak. And if this move breaks out of that descending channel, I'm looking for that lower time frame continuation correction to potentially get in on the potential buy. And a few more lastly to example here on crypto. This to me is more of a horizontal channel. It's more evenly distributed. It's moving across sideways, but it's followed by a bullish impulse, and we know that there is a potential correctional period that's forming. So few more kind of a potential entry. Again, if you like these kind of descending channel, pushing to the bottom of the structure and you open with a reversal order, that's certainly one type of entry. And certainly once the price breaks out of this horizontal channel, if you opt in with something like a long-term hold, you want to enter something like this and stop loss below the low, something like this for a long-term hold, I think that's totally fine. Or you can be looking for that correction after breakout. We break out of that horizontal channel, so let's look for some sort of lower time frame correction, whether it forms here or whether it pushes up a little bit more and forms above. Those are all kind of correction after breakout that I will take advantage of. And last one, I want to go over Cardano. So to me, this is more as a horizontal channel. It's moving kind of a little bit more expanding. So sometimes you can classify them as a channel or expanding structure, or whatever it is. We can clearly see that there is consolidation here. There is a few swing highs and few swing lows, and we follow by a strong bullish impulsive move. So naturally, we want to be looking to see if this horizontal is going to be a continuation. And the key here is there is double bottom here. So double bottom here, again, you can be looking for a potential reversal entry right at the low here, putting the stop loss like this. Or you can looking for a breakout entry. So breakout when we break out this horizontal channel. Or you can be looking for something. What I'm looking for is a correction after breakout. So a small correction after we broke out of that higher time frame channel, higher time frame horizontal channel, and looking for continuation from here and pushing the price up. So these are a few examples of ascending channel, descending channel, or horizontal channel. So let's look back to that chart once again before I wrap this video up. Again, you want to know that these channels will appear in any market, any time frame. So it's best to understand the nature of them, right? The ascending channel we talk about is going to be a reversal kind of structure, right? So we push the price up to the upside, but just to reverse back down, whereas descending channel is pushing the price down correctively and then to reverse back up. Whereas horizontal channel is the more advanced, more neutral one where there's going to be sideways kind of price action, but eventually that is going to give you a little bit more clue. It's either going to continue the previous bearish trend, so bearish trend down, correction and pushed out, and looking for lower time frame to continue lower, whereas we can see a push down from the price, correct in the horizontal channel, and then reverse back up. In that case, looking for that continuation correction for the buy is also very valid. So there it is, guys. That is kind of my full breakdown on parallel channels. Again, different ways of trading them, different ways of analyzing them, but my ways of talking about make sure you look for two swing highs and two swing lows, and there are reversal and continuation parallel channel and different possible entries in them as well. So any question, comments, let me know below, and chat with you guys all next time. All right. Thank you very much.